very special guest in our studios, Hiren Ved, Director and CIO of Alchemy Capital Management with us. Hiren, great to have you here and always a pleasure to chat in person.
Thank you so much. Thanks for having me.
Yeah. Markets in a bit of, I think, confusion. Celebrate करने के reasons बहुत हैं, but हो नहीं पा रहा है. What do you think is the primary reason for that? Because if you think about it, robust SIP numbers, GST, inflation at all-time lows, everything is stacking up, crude is not hurting too much, all of that is there. Is the Indo-US trade deal that big a fly in the ointment?
It's been in the works for a long time, and every time there is a chatter, Mr. Trump makes a statement that we are going to do a deal, or maybe somebody from his administration makes a statement that we are going to do a deal, the expectations kind of go up. I mean, eventually I think we will get a deal, but it may not be as imminent as everybody thinks it is, right? So it's a kind of a little bit of a hangover on the market. I think we saw that in the export numbers. So I think getting a deal is quite important with them. It may not have a significant impact because the sectors that got impacted significantly, which is gems and jewelry exports or textiles, do not form a very large part of the market cap, right? So it doesn't hurt you. It hurts you economically. It hurts you from an export perspective. It doesn't hurt you from a market perspective. But from a sentiment perspective, I think it's very important to get this out of the door. Now, whether it happens this week, next month, who knows?
Do you think that the sentiment booster which could have come from the Q2 performance has been underrated to some extent by the market? Because, varied views on it, but in all, most people agreeing that the quarter was better than expected.
Correct. I think after many quarters, we saw a double-digit earnings growth. And mind you, this was a quarter where there was a lot of GST-related disruption, especially in the consumer side of the business, like autos and durables and stuff like that. And even some FMCG companies called out that distributors were not picking up because of the GST announcements. So really the benefit of that should come in Q3. So looks like that Q3 and Q4 is anyway seasonally very strong for us. So I think that the earnings deceleration that we saw from September of 24, right? I think we are probably past that. So I think the earnings deceleration has bottomed out, and we should see some acceleration in earnings going forward. And therefore, my personal feeling is that while the trade deal is important, but I think if the earnings come through in Q3, just like they surprised a little bit in Q2, irrespective, I think the markets will go up.
Your analysis of the commentary that the corporates are given, you reckon there is a fighting chance that earnings will come by in Q3?
I think so.
You think
I think so. My sense is that the second half should be much better. And, over the years that I have seen, generally the consensus always gets it wrong. So I think second half will be much better than what the consensus expects.
On the other side, which is actually great for markets.
Correct.
Okay.
So you need to surprise the market on earnings, right?
So here's my question, Hiren. If that were to happen, we know that there is macro stability, the election verdict kind of reinforces that. And if there is a trade deal of some sort that also gets stitched between now and December 31st, and then if the first rumblings of the earnings look positive, are we looking at substantially higher levels market-wide? I'm not asking for a nifty target, but market-wise, sentiment-wise, are you looking at substantially higher levels until the budget, until the run of the budget?
I think so. I mean, I think whichever way you look at it, right? I mean, I think we've spent a significant amount of time consolidating. India has underperformed most global markets. India was one of the worst performing EMs in calendar 25. But if you look at the macro, right, as she mentioned, inflation is down. The RBI has been, very dovish right, in terms of liquidity, regulatory. I think we've had a fiscal stimulus, right, in terms of the income tax cut, GST. And also, every state election is like a fiscal stimulus, right? Because there are 10,000 rupee giveaway. It's like a small fiscal stimulus, which, so I think in 25, we have the fiscal and the monetary policy, which is working for us. We've seen earnings bottom out, and India has underperformed, and the market has consolidated. I think just a few things about time, right? So I think we should get into new highs next year.
You're being very careful saying it, Hiren. I mean,
I'm very
storm,
confident.
Right?
In fact, I did write a piece in the Mint saying, and they kind of carried a headline saying that deal or no deal, markets, there are many triggers for the markets to go up, right? So I think generally, going by many years of experience, I think typically it's the earnings which drives the markets. Now, there can always be a lead lag effect because there's a very large event which is expected, which is not yet out of the way. So hopefully, as and when the trade deal happens, we should see a pretty good directionally. I think directionally we are up. We are going up.
Directionally, we are going up. Okay, that's as conservatively positive as you can get. Just going into a bit of what we saw with the earnings, because if that's going to be the big driver, say for the next couple of quarters, and we have bottomed out, who stood where in that sense? Where do you think that spark is really coming from? Underperformance who look like they're turning around in terms of sectors.
So I think we did an analysis. So first of all, what is very interesting is that the Nifty 50 earnings is still struggling, right? So most of the growth is outside the top 50 stocks. So the next 450, which is really carrying the baton of growth. And in every quarters, there are always some swings which, you say X this, X that, but I'm just saying at a very broad level, if you take the top 500 companies, we are back to like 16% profit after tax growth after many quarters, right? What was leading? I think when we did an analysis, I think the big delta came from the so-called new age, new commerce, whatever you want to call it, like people call it by various names, right?
Platform companies.
The platform companies, the new age companies. And YOY, the top line growth was 84% higher. And please understand when, if you look at X of these, like the Nifty or even the NSE 500, top line growth is like less than 10%. It's like 8-9%, right? So revenue isn't growing that fast for most of the companies, but these companies are growing at a much faster pace. And last year, same quarter, there was EBITDA loss. This year, they've all swung into EBITDA profit, right? So that's been the big delta that has happened. And then, there were other sectors like cement, which moved from, where the swing was very good. Capital goods, the swing was decent. The laggards were FMCG and chemicals and textiles and, companies like that. But I think on the whole, if you ask me, it was not really the top line growth, but it was really the margins. EBITDA margins, which the corporate sector was able to kind of control and hold on to, and were able to show, decent numbers. And, this is despite many sectors not contributing, like IT services, single-digit growth. Pharma is very noisy because, it depends on chemicals is still not fully out of the woods. Banks did okay, financials did reasonably well. Capital market guys did phenomenally well. So I think it is the, it is some of the same sectors that there are a few sectors which are kind of leading growth and they continue to lead growth.
Interesting. So, Hiren, let's try and peel some of these, right? So, you spoke about capital markets at the end. This morning we were talking about it, that how, I mean, Grow's listing is quite something, right? But
Yeah.
it's also getting a lot of blue blood excited about some of the non-platform businesses in the capital market space, because a lot of bulk deals in the recent past, right, into some of those. Where within the capital market facets do you find favor? Because even that sector now is large and is multifaceted. There is AMCs, wealth, technically platform or utility companies out there, and then there is the brokerages, right? Where do you find favor and why?
So I think I would say that the most secular opportunities are in exchanges, wealth, and AMCs, right? Obviously, brokers do come in but that stream is a little more volatile. But one thing is very clear, that it's the online digital brokers who are essentially eating up everybody's lunch, right? But I think wealth and asset management has a long runway to grow, right? Because I think the financialization as a theme is still very young, right? I mean, even today, only 6-7% of household savings are coming to the equity markets, despite all the hulla bulla that we are doing about SIPs. These peaks were much higher, even in 2008 boom or the 2000 tech boom. Household savings going into equity markets were in double digits. Nobody realizes that.
Interesting. Okay.
Yes. And you could say that, maybe people got drawn into the tech bubble, they got drawn into something.
The reasons may vary, yeah.
Yeah, but we, we were somewhere historically, we were much higher there. And now, because information is available, right, it's a far more structural story. A lot of the money is coming in through SIPs. This is far more structural.
But the impact on yields, Hiren, for mutual funds, for example, right? There is a consistent move by the regulator to try and not doing with that intent, but it impacts the earnings of and the yields of these asset managers, right? Is that not an overhang?
It is, but I guess that how low can you take that down, right? And yes, this is a challenge. I think in India, every regulator, whether it's the insurance regulator or SEBI, they want that, the cost of intermediation is very, very low. But we also have to be careful that we can't take it too far, right? Because we have to understand that, you have to pay talent well, and, people have to pay for research. But at the same time, the advantage also is that there is very high fixed operating leverage in this business. And my sense is that most of that squeeze in TER or whatever you call it is probably we are almost there, right? So I think from here onwards, the operating leverage will work in your favor. And I agree that, India is not an easy place to do business in all of these, because, you look at UPI, right? I mean, virtually free. So I think in financial services, I think every regulator has seen to it that there is no fat margins in between, and you have to really work hard to build scale to be profitable. And I think that's where the online brokers are scoring, because your platform, your technology costs beyond a point don't go up. And as you get more customers, as those customers do more volumes, everything flows to the bottom line. And therefore, I think that it's been a fundamental change, right? So financial services is probably the only sector in India which has the highest level of digitization that you can think of. There's no other sector which is as digitized as India's capital markets. Think of it.
What about quick commerce and where that's going? You're seeing a lot of that digitization even reflect in the upcoming IPOs.
So I think, across the board, again, I am not commenting on the valuations, but one thing is very clear, that whichever businesses can be digitized, right, growth is swinging there.
Yeah.
Very clearly, right? And therefore, so let's take a step back, right? So when there was organized retailing, they were taking away market share from the mom and pop stores, right? Today, the quick commerce guys are taking away market share from the mom and pop stores and the organized grocery retailers as well, right? So they're like one layer above that. And, I think that we are really seeing the benefits over the last 5 years of the digital stack that we have built. We're seeing many entrepreneurs across industry, whether it is quick commerce, whether it is broking, or even whether it is delivering services.
All sitting on that stack.
All sitting on that digital stack. And somebody is doing broking, somebody is doing quick commerce, somebody is doing household services like Urban, or somebody else is doing, selling insurance policies like PB FinTech. But these guys are growing much faster. They are disrupting the older players. And therefore, I see a significant shift. I won't be surprised. I was just doing a very quick back of the envelope calculation that today in the Nifty 50, there are only 3 companies that are growing profits beyond 18%. Okay. Very few, most of the other guys are in either single digits or very early teens, right? And those are Trent, Bajaj Finance, and Zomato, right? I mean, I can't see anybody else growing much faster. Maybe sometimes some odd pharma company, because of the base effect, might be able to do that, and metals is too volatile, right? But on a sustainable basis. And the so-called new age, new tech just forms 1.5% of Nifty's market cap, which is what, about 200 lakh crores right now. And Zomato is at the gates of 3 lakh crores of market cap, right? So hardly 1.5. I won't be surprised by 2030 if that number is 10-15%. Right? So you're going to see a big churn. You're going to see a lot of these faster growing businesses gain share, gain market cap share, gain revenue share, gain EBITDA share of the overall profit pool, right?
Yeah.
So while
they have to turn profitable as well.
so I think the thing is that where nominal GDP is only growing at 9-10%, right? And therefore it's very difficult for many businesses to grow much beyond nominal GDP, right?
Right.
And some of these businesses are growing much faster. So I think there's going to be a very interesting churn in the Nifty 50, in the Nifty 200, in the Nifty 500. Many of these businesses will become far more dominant than what we see them today.
A changing landscape, very visible in the kind of
companies Uday
that are
Kotak gave an
coming
interview, right, yesterday, and he said that things are structurally changing. That a bank typically used to look at a customer as a saver, but the customer has now become an investor, right? So how do you now service him?
Sure.
And your entire bank and your entire fixed cost structure is built around servicing him in a different way. Now you have to pivot very quickly. Not easy.
Yeah,
Not
those
easy.
who can pivot will, I think, get ahead in that race. Thank you so much, Hiren. Always a pleasure to have you in.
Thank you so much.
And speaking with us.